What's up, you guys? I wanted to hop on here and recap today's action because this is something that we really haven't seen in a little while. And if you are a new trader, these conditions you probably haven't seen before, and you're going to have to trade differently because a lot is going to tie to your emotions. And I will say right off the bat, I did not capitalize on this downside sell off. I did not play short today, I did not play puts, and I was wrong on my analysis. I took a trade to the long side in the first 20 minutes. I'm going to break down why it was a really bad trade, and basically going to use this as a journal to review a trade that I took so you all could realize my mistake so you all don't make the same mistake. And then I'm also going to get into the sell-off on how we could play a move like this, along with not trying to catch a falling knife when there isn't a lot of buying. I see a lot of members trying to play calls off demand today, or just calls in general off of a very strong sell-off, and they're going to get destroyed. And in my opinion, that type of setup is based off of emotions rather than just trading the charts. So first thing is the S&P today, and honestly, I entered calls. I think I played the SPY 450 or 451 calls this morning, right at 9:32 a.m. So one thing is I don't like playing calls right in the first 5 minutes, or I don't like opening up a new position as soon as the market opens up. And there was a really big mistake that I made here. First thing is the pre-market plan. Ideally, like I said, my analysis was incorrect today. I'm not ashamed to admit it. But I was really watching a strong break above 4,500 to play a quick scalp into 45.12, 45.14. It was a key level of supply. If I go to the chart, you're going to see how it's key resistance / key supply, because every time we test it, we fail 3 different times after testing the zone, and then we rallied up. Now, another problem with this is during the time that we tested this key supply zone at 45.12, we also formed new supply, which I did not have marked. And again, this was a mistake on my end, and I wish I saw this. Somebody actually brought it to my attention before the market even opened up, and I still took the trade. So we did have a 90-minute supply zone at 45.03, and if I had this on my charts, I probably would say 90% of the time I will not be taking this long trade, but I did not have it on my chart, and we had a clean rejection from that area. Now, going to a 1-minute chart, another reason why I took this trade was if I pull up Bookmap, the buying was decent. This is at 9:30, right where my cursor's at right now, and there was some decent buying above 4,500. As you can see, we had a clear resistance passive seller at 4,500, and I took it long as soon as we got above that. And my stop loss was going to be the low a day around 44.94. So from a risk to reward perspective, I was risking about 7 or 8 points to make 10 points. Not the best risk to reward, maybe about 12 points. Not the best risk to reward, but I will mention that the buying really was nothing significant here. Other than us taking above 4,500, there really wasn't any clear, very large buying at this level. It was just the speed of the break above 4,500 that I was okay with taking it. And immediately it got met with selling at 45.07, which is why in the intraday commentary tab, pull this up here, and my apologies for being not very present today. As soon as I took this trade, I had to go back home. I feel like absolute dog shit right now. I've just found the energy to make this video. I don't know if you could hear it in my voice. But I said ES is finding sellers at 45.07. If equity strength could continue and ES cannot break above this level, it's a red flag for me. And if equity strength can continue and ES could break above 45.07, we should hit our 45.12 supply. So my reasoning for this trade was decent buying, and I just wanted a quick scalp. It was only 8 points on the E-mini, whereas in the first 3 minutes, we moved in a 10-point range. So I really thought that we could get that quick little push up, and I would get out of this position, get a quick boost on the premiums, get out, and be happy with my day. The problem with this setup is we had clear selling at the 45.07 area. We broke the high, and we failed to stay above the high. Now, at this point, we had major market-leading equities. This is why it's important to look at these equities at this point. Tesla was rallying, but Tesla was at the highs. So Tesla at the point of this entry looked very bullish. We didn't look bearish yet, but we were at the highs and we were failing to move up. We also had other names like Microsoft, which had a very strong 20-minute rally at the open. We also had a name like Apple, which showed very, very strong movement in the first 2 hours of the market open today. What else? We had Amazon, right? First 5 minutes, very strong. But as soon as these names lost some steam, and at the point, remember what I said, I didn't have this supply zone marked up here, but at the point that we couldn't break above the 4507, we failed to stay above the high, and we were struggling at the supply zone. I should have realized that, and I should have got out of this trade. That's a red flag. There's a point of coming up with a plan and sticking to that plan no matter what happens. But then there's a point where if you get in and the analysis looked good prior to entering or during entering, but then a few minutes after, the trade and your original analysis doesn't look good anymore, or the analysis that you originally came up with provides a red flag and the odds of it happening is a little slimmer, then yeah, maybe deviate away from your plan and protect yourself and take profits. Now at this point, another red flag in my opinion, which is a mistake on my end, was NASDAQ was rallying right inside of this key supply zone at 14277. This is clear resistance. Every single time we test it, we sell off. We got one time up here, another time over here, third time, a fourth time, and today's the fifth time. So obviously, clear resistance. And I think the reasoning why I kind of played SPY was I was expecting this to break. We did look like we were holding the highs. It looked like we were at least going to go test the highs and break above supply, but we never got it. We hit the supply. At the same time, equities were failing at high a day. At the same time, ES was inside of supply and failing to break the high. And NASDAQ was at this key supply zone. So that was a red flag. And looking back in hindsight and how I review this trade is I should have got out of my ES position and I should have protected myself when I had a little profits or when I had a 10-cent loss on the position. NASDAQ, in hindsight, reviewing this, I know a bunch of members took this. Clean double top inside of supply. Made a high, we failed at it, came back and tested it, clean double top, and a clean sell-off from that. In hindsight, this would have been a good short setup, very minimal risk, and I know a bunch of you did take that, very good setup, and you guys traded much better than I did today. So now I'm in this position, we broke below the trend line, and I stopped out below 4494. Okay, so calls out the picture, was a losing trade. I hope I just broke up why it was wrong and why I should have avoided that at that moment. Now we're selling off, right? If I had this supply zone, then obviously bears obviously have control as we are selling off and we are creating new supply. And at this point, you know, NASDAQ had a rejection from that supply zone. So bears obviously have control intraday, and now we're selling off. Now, if you recall from the pre-market plan, even from yesterday's pre-market plan, was I wanted to find buyers at 4476 demand. And I wanted to highlight a key point here was if we had heavy selling pressure, the chances of dips being bought are slim, and I would imagine the demand zones below to be unreliable. And the bearish plan below 4443 is very possible, and I'm going to be less inclined to playing longs on a reversal. I really hoped that little note right there helped you all, avoiding catching a falling knife and playing calls. We came into this demand zone. We failed to find buyers. I'm even going to go on a 5-minute chart and show you what this looked like. We came into the zone. There's nothing saying buyers are here. Volume is weak. We have lower wicks, but price is not moving up. We have green candles, but that's not enough to enter long. And that would have been good to protect us. We broke below demand. And at this point, it's pretty evident that selling pressure is heavy and there's no buyers in the market. Also, looking back at market-leading equities, extremely weak. Making lower lows, making lower highs. We got Apple at this point selling off. We got Tesla, which is failing to find buyers. Clean sell-off on that all day. Microsoft, you know, same thing. Lower lows, lower highs. When the market's trading like this, I don't know how to describe it other than you just watching this action in real time and making a mental note of it. But I consider this action to be kind of heavy. I don't know what I mean by that. I don't know how to describe it. It's more of an intuition and a feeling. but I mean heavy towards the sell side, and there's not much buyers. Similar, like I said in the pre-market plan, to April 4th or April 5th's action, where we made lower lows, we made lower highs all day long, and even March 31st, where the selling was very heavy and there wasn't really buyers evident in the market. So with this context, you got to be extremely careful to catch a falling knife. The market is heavy. The market is aggressively selling off. We have weak major market leading equities. And if we are watching the tape, whether you look at time and sales, level 2, you do not need Bookmap to do this. All day long, there was no aggressive buyers. Look how heavy the aggressive sellers are as the market's moving lower. You could see it by those large red dots. You don't really see any large aggressive buyers step into the market and really bring the market any higher. Selling pressure was very heavy today, and there was not a lot of buyers. Now, looking back at the chart, we had a clean sell-off from the highs. Yesterday was an extreme balance day, whereas today we're immediately wiping away yesterday's balance, and we're going to test this 4443 demand zone. So now we come into the zone, and this is the basically lower part of the balance. And the pre-market plan from yesterday was I wanted to see a break below. I think it was like 4435, 4440, and to potentially play puts into the 4397 zone. Why this was important was from a market structure standpoint, from this area to the highs is an extreme balance where the market was consolidating in a very tight range over a 2-day period after that rally of the shorts covering on Monday, or on Tuesday, excuse me. So then we come into this demand zone, and I saw a member wanted me to review his trade on this. He played calls at this demand zone, right? So as a trader, we're going to want, we see a green box and we automatically think we have to enter the market. Or we see a red box and we automatically think that we have to sell the market. From a contextual standpoint, the market all day is making lower lows, it's making lower highs. As I said earlier, major market leading equities are extremely weak. We don't have demand on them. We're failing to find buyers. We're putting in lower lows, putting in lower highs, and there's absolutely no signs of buying in the market. A lot of people see the market come into a demand zone and they see a green candle and they think, okay, boom, I'm getting long right here. We're at demand. It's a key zone. Let me just get long because I see a green candle and the market's moving up. That's not good enough for me to get long in general. And when you add the context of today's action, that's especially not good for me to get long. So when the market is this heavy towards the sell side, there's one thing that I will do to play the market long. I will wait for it to bounce off of demand. This is when the market is showing no signs of buyers and there's no bids into the market. I'll wait for it to bounce off demand. Maybe we come up, hit VWAP, we create demand down here where my oval's at, and we come back down to retest it, put in a higher low, and then we could get long. That's how you avoid catching a falling knife. But when the market is like this and we are trying to catch a falling knife, we haven't seen a 100-point sell-off on the S&P in a while, I don't think. So to not catch a falling knife, you do that. You wait for demand to form. You play a retest or a higher low at it. All day long, there's no signs of buying, very heavy signs of selling, and there's basically no bids into the market. This is how you avoid catching a falling knife and playing calls off demand, extreme sell-off. And if we did play puts, let's just say at supply, this thing sold off all day. These are the type of days you got to keep runners where you can make a very small investment be a very large one if you capitalize on it and make your runners run. If we were in short, let's just say we got short below 4440 when we found no buyers at demand, right? Stop loss above this high. Maybe we took profit on the move down over here, but now we're in maybe 80 or 20% of our position left. We get a move up. We don't get scared. The market's still making lower lows, still making lower highs. And that sell-off still continues going into end of day as I'm recording this video, about 30 minutes before the market closes. So clean sell-off on that all day long. It was definitely a mismanaged day, and my analysis was not correct at all. Bite the bullet on that one. And it sucks seeing such a large sell-off and not being able to capitalize on it. I do have major FOMO. I will not lie about that either, but I'm happy to see some of you capitalized on it. The market will be here tomorrow. Market will be here next week. There's always will be other opportunities. but basically went over everything that I did want to talk about. Okay, and another thing, this is about making everything align. So exactly what I said earlier about excuse me, my call position on SPY was there was a lot of discrepancies in the market. So I was watching NASDAQ at that supply at the time I was in SPY calls, but things were all over the place. When things are all over the place, it's going to be very difficult to properly read the market in an efficient manner. So equities were very strong. Apple, Microsoft, Amazon, Tesla were all near their highs at the point I was in long. NASDAQ at this point was at the key supply zone. So if I wasn't in SPY calls, I would not have been looking to play calls on NASDAQ. I would have been looking to either hold off on calls or potentially play puts if we saw some selling activity and that double top was perfect. So right there we have a bullish scenario and we have a bearish scenario. We also, now I'm in SPY calls, had the S&P failing to reclaim above that 45.07 mark. So now we have another bearish scenario. And I said many want to short NQ, although it could work. I think how strong equities are, this might be a lower quality setup. There's not a lot aligning and makes any setup less clear to read and harder to trade in my opinion. So there was a lot of conflicting signals. Going back in my journal and reviewing the best trades that I qualify as like A plus, 10 out of 10, perfect setup, I have everything aligning. You know, NASDAQ is strong. NASDAQ's bouncing off demand. The S&P is strong, bouncing off demand. Market leading equities are rallying. Market leading equities are bouncing off demand. So when things don't align, it's going to be extremely tricky. And it's better to just sit on your hands and wait for a better opportunity where you could properly read the market rather than just hopping in randomly because you see something moving. So I think that's enough. Yeah, if you have any questions, let me know. I would appreciate any feedback. I feel awful because not only did I take a loss today, I didn't want to deter some people from playing puts. And I hope I didn't influence enough people to play long at the morning because it was not a good call at all. And yeah, so I appreciate any feedback in the main chat. Tag me. And yeah, tomorrow is a new day.